If you invest in agricultural commodities, eat food from global supply chains, or track grocery prices, watch one thread. A rumor. It sounds too small to matter, but in modern food markets, a false claim can outrun pathogens, regulators, and farmers trying to correct it. That is the misinformation paradox. A fake crisis can create real losses before truth catches up. In 2012, one television broadcast branded a USDA-approved beef product as pink slime. Within days, $400 million in revenue vanished. 3 processing plants shut down. 700 workers lost their jobs, and the American cattle industry had to slaughter 1.5 million additional animals every year to replace the lost lean meat. 1 year earlier, German health authorities blamed Spanish cucumbers for a deadly E. coli outbreak. Over €1 billion in export markets froze within hours. The cucumbers were completely innocent. The real source turned up weeks later: organic fenugreek sprouts from Egypt, grown in Germany. In southern Italy, conspiracy theories claimed a devastating olive tree bacterium was a hoax. Criminal charges hit 10 researchers, containment froze for years, and the infection spread from 80 square kilometers to 8,000. 21 million olive trees died. Damages were estimated at €5.2 billion. Here is why it is more dangerous now. Algorithmic trading systems parse social media sentiment in military sentiment. They can execute massive buy or sell orders before any human verifies a claim. A rumor can inflict more immediate financial damage than the crisis itself. In food, truth is fighting speed. 2 systems now collide. On one side are social media platforms: Facebook, X, YouTube, Reddit, and WhatsApp. Their recommendation algorithms optimize for engagement, and fear, anger, and moral outrage reliably deliver it. Rumors about incurable pathogens, toxic chemical interventions, or impending food shortages rise quickly. Echo chambers form. Mainstream science is framed as corrupt, and alternative claims get elevated. Consumers are vulnerable because misinformation exploits the gap between hazard and risk. In toxicology, a substance can present a theoretical hazard at extreme laboratory doses while posing negligible risk at everyday exposure levels. Misinformation pulls obscure studies where chemicals caused harm at doses hundreds or thousands of times higher than any person would consume. Then it broadcasts them as proof of danger, and manufactured panic can destroy demand instantly. Then come financial markets. Commodity futures on exchanges like the Chicago Mercantile Exchange are now dominated by speculative algorithms using natural language processing and sentiment analysis. They scan news feeds and social media in milliseconds. Once a rumor surfaces, those algorithms fire off massive orders before anyone checks the claim. High-frequency traders follow the momentum, creating price spikes detached from actual supply and demand. After targeted fake news hits, trading volumes surge by up to 55% over the following 3 days. Generative artificial intelligence escalated the threat. In May 2023, an AI-generated image showing an explosion near the Pentagon circulated on verified social media accounts. It triggered a flash crash in the S&P 500 because algorithmic trading systems executed automated sell-offs before anyone confirmed it was fake. In 2024, a finance employee at a multinational in Hong Kong wired $25 million to criminals after a video conference where every executive looked and sounded real. They were real-time deepfakes. The pattern was visible before today's AI tools. In 2018, one false report on a financial research platform claimed a real estate trust had fabricated 310% of its earnings. Within a single trading day, the stock dropped 40%, erasing tens of millions in market capitalization. Machine learning analysis of crowdsourced financial articles found that roughly 2.5% are written with deliberate intent to deceive. Bad information, built for market reaction. Once a rumor hits, damage follows a sequence. First, futures volatility spikes. Non-commercial traders and speculative algorithms price in anticipated demand destruction. Prices overreact, then correct once the false signal is confirmed. Legitimate producers pay higher hedging costs. Then comes asymmetric spot price transmission. Evidence from corn and soybean markets shows negative shocks in futures transmit to spot prices with far greater force than positive shocks. Speculators dump futures contracts based on a rumor, so futures collapse. But processors who suspect the rumor is false may aggressively buy physical commodities. That opens severe basis risk. The futures price and local cash price stop moving together. Then, derivatives stop protecting producers. The third stage has the longest tail. Farmers facing squeezed margins start liquidating herds, halting breeding programs, and pulling back feedlot placements. If the disease signal is false, that preemptive culling becomes a real inventory deficit months later. Replacing a culled commercial poultry flock takes approximately 6 months before new birds mature and lay eggs. A false signal that triggers even minor depopulation can become a real macroeconomic supply shock later in the year. Market concentration makes it worse. A handful of processors dominate the U.S. beef packing industry, controlling the vast majority of national slaughter capacity. A false disease signal near one major hub can create outsized, system-wide disruption. Research confirms that shifts in food retail and distributor concentration explain up to 60% of the variation in how food price shocks pass through to core inflation over the last 4 decades. The ripple also reaches agricultural lending. Farm operations run on short-term operating loans secured by crop revenues and long-term debt backed by equipment and real estate. When misinformation destroys local cash prices, loan default probabilities jump. Models predict that under high exogenous risk scenarios, agricultural loans past due climb by roughly 17 basis points nationally. Strong insurance coverage can cut past due rates by 6 basis points per standard deviation increase in county-level indemnifications. That only applies to covered risks. Misinformation-driven shocks are not covered by standard federal crop insurance or revenue protection programs. A farmer whose crop value collapses because of a viral social media rumor cannot file an indemnity claim. The lender absorbs the exposure. Banks then restructure short-term loans into long-term debt backed by farmland. That shifts operational risk into real estate risk. If a sustained campaign depresses demand for a region's produce, land values can fall as defaults climb. The 2012 lean finely textured beef crisis is the textbook case. LFTB is a safe product used for over 2 decades to recover lean meat from beef trimmings. It uses centrifuge systems and food-grade ammonium hydroxide to eliminate pathogens like E. coli and Salmonella. A coordinated media campaign weaponized the label "Pink Slime." Beef Products Incorporated watched 80% of sales collapse, losing $400 million. 3 of 4 plants went dark, and 700 employees lost their jobs. Before the crisis, the LFTB process pulled 12 to 18 kilograms of lean beef from each animal's fat trimmings. That added approximately $30 of value to every slaughtered carcass. Once retailers and the National School Lunch Program walked away, that $30 per head evaporated. Replacing the lost lean supply required the slaughter of an additional 1.5 million cattle every year. BPI filed a $1.9 billion defamation lawsuit under South Dakota's Agricultural Product Disparagement Act. Potential treble damages reached $5.7 billion, and the case settled for $177 million, far below the real damage. The 2011 E. coli crisis in Europe proved governments can cause misinformation damage as fast as media outlets. During the Shiga toxin-producing E. coli 0104H4 outbreak, German health authorities prematurely declared Spanish cucumbers the definitive source. The European Rapid Alert System broadcast that warning across the continent. Spanish exporters lost Germany, a market worth €410 million annually, plus France, the UK, and the Netherlands at $630 million. Rigorous testing later cleared the cucumbers entirely. The real source was organic fenugreek sprouts from Egypt. The damage still landed in Spain. Agricultural income in Spain's Murcia region dropped 11.3% across the entire growing season. The EU's emergency compensation of €210 million covered only about half the actual losses. Correction does not rewind the season. Buyers vanish, contracts break, shelves shift, and farms absorb the loss. Southern Italy's Xylella fastidiosa disaster shows what happens when misinformation blocks containment. Starting in 2013, the bacterium caused olive quick decline syndrome in centuries-old trees. Scientists in the EU mandated felling infected trees, buffer zones, and targeted pesticide use. Online campaigns called the bacterium a hoax, a funding grab, a pesticide company plot, or an excuse to bulldoze groves for solar panels. Activists organized riots and physically blocked forestry officers. Local prosecutors filed criminal charges against 10 researchers for allegedly introducing the disease. A judge dismissed the charges years later, but containment had already frozen. Because nobody stopped the epidemic when it covered just 80 square kilometers, the infected area expanded 100-fold to 8,000 square kilometers across 40% of the Apulia region. 21 million olive trees died. Over 200 olive oil mills shut permanently. Total estimated economic impact reached up to 5.2 billion euros. In 2019, the European Court of Justice ruled that Italy failed its obligations under EU law. Bananas face a similar amplification problem, built on a genuine but media-inflated threat. Global trade depends almost entirely on one genetic clone, the Cavendish. Tropical race 4 is a soil-borne fungus that blocks the plant's vascular system and persists in soil for decades. After devastating Southeast Asian plantations, it surfaced in Colombia in 2019, Peru in 21, Venezuela in 23, and Ecuador in December 23. Ecuador is the world's largest banana exporter, at 5 to 6 million tons annually. Fresh Del Monte's CEO called Tropical Race 4 a losing battle during an earnings call and warned that prices will shock the market. 45% of organic farms in Peru's Piura region are already infected. Worst-case amplification has fueled speculative hoarding. The fear echoes the historical collapse of the Gros Michel banana, which inflicted losses equivalent to $2.3 billion. Here, information can still intensify a real disease shock. Wheat markets face another version of the same weapon. Carnal bunt is purely a quality pest, causing discoloration and odor, with no risk to human or animal health. Yet, nations routinely treat isolated detections as justification for overnight closures. A PHIS established strict quarantine zones in Arizona and California, after the first U.S. detection in 1996. Wheat blast devastated 16% of Bangladesh's cultivated acreage in 2016. India banned cultivation within 5 kilometers of the border, and West Bengal prohibited border district planting for 3 consecutive years. Florida's citrus canker failure shows the permanent cost of destroyed trust. When canker re-emerged in 1995, authorities mandated cutting down every citrus tree within 1,900 feet of any infected tree. Government crews with chainsaws on private property triggered fury, lawsuits, and misinformation about government motives. Legal delays let the pathogen spread past containment. Then, citrus greening arrived shortly after, an incurable disease far deadlier than canker. Cooperation was gone, early intervention collapsed, and greening now sits in more than 90% of Florida's citrus acres, driving an 80% production decline since 2005. One example shows what works when the approach is flipped. Top-down science communication often fails in skeptical agricultural communities, and research shows it can trigger a backfire effect, where beliefs harden when institutional authorities challenge them. Decentralized approaches cut through that resistance. The No. 60 Min Worms initiative partnered university scientists directly with commercial farmers to co-design earthworm population tracking methods. Growers became respected data collectors, not passive recipients of expert lectures. That peer network countered national press claims that modern farming had turned fields into subterranean deserts, and the data proved anisic earthworms managed Fusarium fungi, delivering biocontrol valued at €75 per hectare. The core distinction is clean. Misinformation shocks destroy demand based on phantom hazards, leaving viable supply stranded and worthless. True biological outbreaks destroy supply based on verified risk. A misinformation shock hits instantly, driven by algorithmic sentiment. A true outbreak spreads progressively, tracking biological vectors. But as the 2011 E. coli false alarm proved, a fast-moving rumor can match or exceed a genuine outbreak for everyone caught in its path. Defenses are emerging on multiple fronts. The IPPC adopted a communications strategy for 2023 through 2030. EPPO launched the Don't Risk It campaign and created Beastie the Bug, a digital mascot that traveled over 425,000 kilometers to promote phytosanitary awareness. CABI's PlantWise network operates plant clinics across Asia, Africa, and the Americas, reaching over 50 million smallholder farmers with verified, science-based diagnostics. Legally, 13 U.S. states carry agricultural product disparagement laws. India's SEBI now compels listed companies to verify, confirm, deny, or clarify market rumors within 24 hours whenever a material price movement occurs. 58 out of 100 tracked entities filed under that regulation within just 13 months. Technology is advancing too. Deep learning architectures using convolutional neural networks, long short-term memory networks, and BERT already detect fake news. Dual-stream LSTM models fusing historical price data with fact-checked news summaries achieve an area under the curve of 0.94 when predicting commodity price shocks, compared to 0.34 for traditional logistic regression. Blockchain-based digital phytosanitary certificates lock commodity health records into immutable, distributed ledgers. Enforce trade rules automatically, blocking shipments during verified outbreaks while preventing unjustified embargoes triggered by rumors. At the farm level, IoT sensors monitoring animal feeding time, physical activity, and social isolation detect disease 1 to 3 days before clinical signs appear. That gives verified telemetry to debunk false signals. The defense has to be faster than the rumor. Content verification is moving into infrastructure. The C2PA standard, backed by Amazon, Meta, Google, Microsoft, and OpenAI, embeds cryptographic content credentials into digital media at the point of creation. A global proof of reality framework landed at the SEC's Crypto Task Force in March 2026. It established provenance standards for any digital artifact used in regulatory or financial decisions. If exchanges mandated C2PA compliance for official corporate communications, algorithmic trading systems could reject uncredentialed data streams. That could immunize market infrastructure against synthetic misinformation. There is also a behavioral defense. Pre-bunking, or psychological inoculation, exposes people to weakened doses of manipulation techniques, so they build mental antibodies. The online game, Bad News, simulates fake news creation to teach users to spot emotional exploitation. Studies confirm the approach meaningfully reduces susceptibility to subsequent misinformation. Technology can verify media, but people still need to spot manipulation before sharing it. $78 billion. That is the estimated annual cost of disinformation to the global economy. That includes $39 billion in direct stock market losses and $17 billion in suboptimal financial decisions driven by deceptive inputs. Global population reaches roughly 10.6 billion by 2050, requiring a 62% increase in food demand. Any disruption to agricultural production, whether caused by an actual crisis or the mere rumor of one, can send food prices upward. The food crises of 2007 through 2008 and 2011 through 2013 showed that pushing hundreds of millions of people into acute hunger. Agricultural market integrity is no longer just about keeping pathogens out. It is equally about managing the information around them. Misinformation halts containment, triggers losses in the billions, and generates trade barriers faster than any pathogen can physically spread. The open question is whether the systems built to protect truth can outrun the systems built to exploit fear. Because in the food economy now, what people believe can change what everyone pays.